But let's move ground a little bit from the equity space to the personal finance segment. Harshvardhan Roongta of Roongta Securities joins us now. Harshvardhan, thanks for joining us. Now, LIC has launched a new product, Jeevan Sugam. We just want to ask you what the benefits are of this particular product, what are the drawbacks, and would you recommend investors to go ahead and buy it?
Well, Sonia, if you just look at the product and the features itself, it was launched on 25th February and it's going to be open only for 45 days. So we'll see it closing on the 10th or 11th of April. The second part is that it is a single premium. You have to pay the premium only once and the maturity is after 10 years. So the money comes back in the year 2023. Now, since it's a life insurance product, there needs to be an element of life insurance, so which is 10 times of the premium that a person pays. Now, if you see the positioning of this product by the distribution force is that it is an attractive investment proposition comparable to tax-free bonds and also gives you life cover. So to understand the returns element that and in comparison to tax-free bonds, we've got certain sample premiums for different age groups. So if you take an 8-year-old, he needs to pay in about 55,000 rupees and gets 1 lakh at the end of 10 years, which is guaranteed. The returns work out to about 6.14%. The same thing for a 25-year-old is about 5.72%, and for a 35-year-old is a 5.2%. So this is the guaranteed portion of the returns that you get. In addition to this, there is also a probability of getting a loyalty addition at the end of 10 years. Now, if that comes by, we will see the returns push up by another 0.5 basis point, 50 basis points to 100 basis points. So, combining the returns that one is expected to get, and if a person pays more than 2 lakh of rupees as premium, these returns would say push up a little further because there are some discounts that LIC gives for high premiums. Now, if we sum it up for a 25-year-old person, if you look at the returns that he's likely to get from this investment over the next 10 years, is about 6.75% to 7% all in all, plus a life cover of 10 times of the premium that he pays. So strictly speaking, I would say that a tax-free bond is more superior in terms of returns. If you're comparing and looking at only returns element, the tax-free bonds would be far more superior in terms of returns. However, if a person who's below 25 years of age may consider investing into this only because if he needs ATC benefits, the tax benefits under ATC, and he's looking some nominal tax your life cover along with it. So tax-free bonds would probably in terms of returns would be slightly better off.
Harsh, I have a couple of objections to a product being sold like this. Just tell me if they're legitimate. Why would you buy life cover for an 80-year-old? Why are you buying life cover? Because if that person, he's an earning member of the family, if he ceases to exist, the family suffers, and therefore you replace. It is not a replacement of an emotional loss. It is a replacement of a financial loss. An 80-year-old is not a source of financial income for the family. So selling life cover for an 80-year-old somehow seems, complete mis-selling to me. And secondly, at 6.7% as well, how much is if you took a term policy and a PPF, would not the gain and the life cover be the same and the gain be more?
Absolutely, Lata, you're right. As I mentioned that this product is more positioned as an investment opportunity comparable to tax-free bonds. So, and because it is offered by a life insurance company, there has to be an element of life insurance, the coverage which needs to be inbuilt into it. So your points are absolutely valid. Both your concerns, one that life insurance for an 8-year-old or even for that matter for a 25-year-old, he takes 10 times of the cover that he gets as he pays only for a 10-year period is immaterial. So the life insurance component added into this is only because as a life insurance company, you have to give cover. Secondly, the tax benefits have to be, if you don't have a cover which is 10 times of what you pay, then you do not even get the returns as tax-free in your hands. So the element of life insurance is only for these two purposes. The second concern which you said that if I buy a term policy and take a PPF or a tax-free bond for that matter is a more prudent financial planning method. This is just an investment product which has been positioned in comparison to something which is the tax-free bonds and the other investment avenues. And LIC has been successful in the past to launch products around this quarter of the financial year.
Did you go through the fine print? What was the charge in terms of service charges, mortality charges? Would you know even for any particular age group?
See, Lata, this product is not a unit-linked policy, so there are no differential, there is no categorically mentioned mortality charges. What an investor needs to look at is that I am paying an X amount. At the end of 10 years, LIC is promising you that they'll give you 1 lakh rupees back.
If you mean they don't mention service charges for a product like this? Service and mortality, the other charges?
No,
they're not separately mentioned?
Absolutely not.
Okay.
No, they are not separately mentioned, and they're not even as a material fact in this investment product. You know what you're paying, you know what you will get at the end of the period. So whatever LIC does internally is entirely their purview.
No, I have just a complaint of anyone taking a service charge for a product like this, because you take it once and then after 10 years or 15 years you get the money. There's no service rendered in between. They're not coming and taking your premiums from you. So, service charges should actually not be there at all. In any case, there's some good news coming in before we get into a break, Harsh. Petrol price may be cut by 1 rupee a litre, and I think diesel price as well, there was some mention. This is very important.
Will be hiked. Diesel price will continue to be hiked.
The difference is important. To bring down the difference is important, because otherwise for everyone who makes a decision not to buy a petrol car and buy a diesel car, the fisc is bleeding, and therefore this has to be reduced for the sake of the national exchequer, if not for anything else. This rapacious difference does not make any sense from a national interest standpoint. Okay, a break. On that note, we have viewers with questions. We are back. Right, the important news coming in that diesel price may be increased by 40 to 50 paise from March 15. Remember, it has been the 15th has been marked as the date when the oil product prices are revised by the oil refiners. So expectation is that tomorrow some announcement might come in, and that will be that diesel price will be hiked, but petrol could be dropped. Probably because we've seen a slight softening of global crude prices as well. Rupee has remained somewhat stable, so maybe a petrol price cut is in order. In any case, even after the last petrol price hike, the oil companies were telling us that they are still paying a 10 paise subsidy or thereabouts on a litre. This cut, of course, will perhaps be because of a change in the landed price of both crude as well as petrol. We have to wait and see what this might do to the balance sheets of oil companies. This 45 paise increase should have been mostly factored in by analysts, that this 45 will keep coming in so soon after the announcement of the deficit.
Yeah, until they stop incurring losses is what the management's told us, that they can perhaps go ahead.
It is unlikely so soon in the cycle the oil companies will stop increasing the diesel prices.
For a while, yeah.
That would be, I mean, where is the claim of the governor that the fiscal authorities have firmly embraced fiscal responsibility, a statement which set the bond markets rising. Where will you show your face if you don't raise the fuel prices now? Okay, let's get to our personal finance segment. Rawal Singh Bhatti from Jodhpur is waiting by with his question. Rawal Singh ji, go ahead. What is your question?
जी मैम, गुड आफ्टरनून
जी।
जी सर, मेरा एक क्वेश्चन है कि मैंने 2 फंड में इन्वेस्ट कर रखा है
जी।
जी, HDFC टॉप 200 में 1300 रुपए का है।
ओके।
और फ्रैंकलिन ब्लू चिप इंडिया में है 1200 रुपए का।
अच्छा।
और मेरा गोल है मैम 20 ईयर के बाद में 50 लाख रुपए। जी।
और आप सालाना कितना निवेश कर सकते हैं?
जी, मार्केट में नहीं, अगर कोई फंड बता रहे हो तो आप मैं कर दूंगा उसमें।
नहीं, आपके पास इनकम कितना है जो आप निवेश के लिए बाजू में रखे हैं?
जी मैम, 7,000 है।
जी, 7,000
पर मंथ।
पर मंथ आप कितना? 7,000।
हाँ,
पर मंथ 7,000 आप निवेश कर सकते हैं, मतलब सालाना आप 80,000 के ऊपर निवेश कर सकते हैं।
जी जी मैम।
ओके, Harsh, that's his question. He can put aside 80,000 rupees, 84,000 rupees to be precise, every year, and he wants 50 lakhs at the end of 20 years.
Well, रावल जी, वन इज कि पहली बात यह है कि आप जो अभी 2,500 रुपये महीना कर रहे हैं, अगर हम 14% से इसे अज्यूम करें रिटर्न्स जो मिलने हैं, तो 20 साल बाद आपके अगर ये 2,500 रुपये ही आप अगर निवेश करते हैं तो वो बन जाता है करीबन 32 लैक्स। तो अगर आपको 50 लाख रुपए चाहिए तो आपको यही कैलकुलेशंस के हिसाब से आपको हर महीने का 4,000 रुपये निवेश करने हैं। तो हम समझ रहे हैं कि आप उससे कई ज़्यादा कर सकते हैं। सो आप इक्विटी म्यूचुअल फंड में ज़रूर करिए निवेश, और जो नई स्कीम में जो आप निवेश करेंगे, जो एग्जिस्टिंग 2 स्कीम्स आपकी हैं वो एक ही कैटेगरी की है, लेकिन मैं सजेस्ट करूंगा कि आप कंटिन्यू करिए क्योंकि दोनों अच्छी स्कीम्स हैं। इस दौरान अभी उसे आप ब्रेक करने की कोई ज़रूरत नहीं है। जो आप नया निवेश करेंगे वो आप इंडेक्स फंड में करिए और उसे वैसे ही उसे ट्रैक करने की भी जरूरत नहीं पड़ेगी आपको। आप फ्रैंकलिन इंडिया इंडेक्स फंड बीएसई सेंसेक्स प्लान में निवेश करिए, जो भी आपका एडिशनल अमाउंट आप हर महीना का कर सकते हैं और उसी में रहने दीजिए। तो आपका जो कॉर्पस, जो आपका टारगेट है, वो आपको 20 इयर्स में जरूर अचीव हो जाएगा।
Okay, fair enough. I hope our investor was listening to that advice. Thanks so much, Harsh, for joining us. I just want to pull up the intraday charts of many of these oil marketing companies.